Sometimes the best way to really get a handle on a market is just to zoom in on a single day. And in the wild world of crypto, one recent 24-hour period told this fascinating story of a market just pulling itself in two completely opposite directions. On one side, you have this march toward mainstream acceptance. And on the other, well, chaos and risk. So let's break down this tug of war. And boom, right here. This is the heart of the whole thing. In the exact same news cycle, we saw Bitcoin surging up towards $88,000. Everyone's getting excited about potential interest rate cuts. But at the very same time, nearly $2 billion fled from crypto investment funds. So, what gives? Which one of these is the real story? I mean, how can both be true at the same time?
All right, first up, let's talk about the side pulling crypto towards, respectability. This isn't just about prices going up. This is about a fundamental push right into the heart of the traditional financial world. This is crypto's big march to the mainstream.
For the longest time, right, Wall Street only had eyes for Bitcoin. Everything else was just noise. Well, that is changing, and it's changing fast. The big players are now creating regulated, easy-to-use products for a whole bunch of different crypto assets. All of a sudden, investing in crypto is starting to look almost as simple as buying a stock. It's like the floodgates are finally swinging open.
And this isn't just a trickle, it is a full-on flood of good news. I mean, just think about what's happening here. We're talking brand new ETFs for stuff like Dogecoin and XRP on the New York Stock Exchange. That was basically science fiction a couple of years ago. Then you have the SEC giving a Solana DePIN token the green light, calling it a utility, not a security. That is a massive win, giving some much-needed clarity. And on top of all that, corporations are making huge bets and venture capital is just pouring in. You see? Each one of these is like a massive pillar being cemented in place for crypto's big move into the mainstream.
And hey, you don't have to take my word for it. Grayscale's own chief investment officer called these new ETFs the next liquidity wave. And look, that's not just marketing talk. They genuinely see these products as the gateway for a torrent of new institutional money to come flooding into the crypto space. And this belief, it's not just talk. It's showing up in the corporate treasuries. Get this. One company, BitMine Immersion, now holds $10.7 billion worth of Ethereum. That's not just dipping a toe in the water. That's a full-on cannonball, a massive statement of belief in the future of the network.
And right behind them, the smart money is piling in. Venture capitalists poured $4.6 billion into crypto in just the last quarter. So you've got these corporate giants, you've got the VCs, they're all betting billions. The march to the mainstream looks pretty unstoppable, doesn't it? Well, that's only half the picture.
Because for every single step crypto takes towards Wall Street respectability, that old wild frontier yanks it right back. This is the other side of the coin, a chaotic, dangerous landscape where the old risks are very, very much alive. Remember that huge VC funding number we just saw? Well, contrast that with this. Nearly $2 billion flowed out of digital asset funds in a single week. In fact, it was the third largest weekly outflow recorded since 2018. So while all this new excited money was coming in one door, a ton of existing money was sprinting out the other. And look, this wasn't just a little bit of panic in some obscure corner of the market. Oh no, this was a broad-based retreat. Bitcoin funds lost $1.3 billion. Ethereum lost almost $600 million. Even a market favorite like Solana saw over $150 million get pulled out. The nervousness was absolutely everywhere. But the dangers out there on the crypto frontier, they go way beyond just red and green lines on a chart. Sometimes they can show up right at your front door.
This story out of San Francisco, man, it's just a terrifying example of how real this danger can get. An armed robber pretends to be a delivery driver, ties up the victim, and just walks away with $11 million worth of crypto, straight from their hardware wallets. This isn't some complex digital hack from across the globe. This is a violent, home invasion robbery. It's a brutal reminder that the whole be-your-own-bank thing comes with some very real, very physical risks.
And it's not just physical crime. The actual technology itself, the code that everything is built on, is still a total battleground, where a tiny vulnerability can have absolutely catastrophic results.
Just look at what went down with Cardano. A single poison transaction found a bug that had been sitting there for 3 years, and it caused the entire network to literally split in two. For 2 straight hours, the entire chain just stopped, dead in the water. Now, they fixed it with an emergency hard fork, but the founder called it deliberate sabotage and even got the FBI involved. It's just this really stark reminder that even a huge top-tier project can be brought to its knees by one tiny little flaw.
And finally, there's politics. Getting closer to the mainstream world of power, it's a total double-edged sword. A firm with ties to the Trump family, World Liberty Financial, raised over $100 million, a huge success. But that success brought a ton of scrutiny, and now that same firm is facing a Senate probe over alleged sales to sanctioned wallets. It just goes to show, what looks like a political win one day can become a massive political headache the next.
Okay, so you've got these two incredibly powerful, totally contradictory stories happening all at once. The big push for legitimacy against the constant pull of this dangerous, wild frontier. So what are we supposed to make of all this?
Really, the best way to understand this is to call it what it is: dynamic tension. These two forces, the mainstream adoption and the frontier chaos, they're not canceling each other out. No, they're both active, they're both powerful, and they are literally wrestling to shape the future of this industry right now, in real time. And this is the key takeaway. This conflict, this tug of war, it's not a bug. It's not some problem that needs to be fixed. It is the system. This is the defining feature of crypto in its current stage of evolution, an industry that's fighting to grow up while still desperately clinging to its wild, revolutionary roots.
Which leaves us all with the big, ultimate question. As Wall Street money pulls crypto in one direction and the chaos of the frontier pulls it in another, what is it ultimately going to become? Will it get tamed, becoming just another asset class, and maybe losing its soul in the process? Or will its wild, unpredictable side forever keep it on the fringes of finance? That right there is the multi-trillion-dollar question that's being answered, one chaotic day at a time.